Greetings, everyone. Welcome to the show. We are going to talk about capital raising and why it's important to your deals right after this.
That's funny. That's like it's so funny when you see people on the news doing a news set and they say something and they just wait for stuff to happen and they wait for stuff to happen.
Well, just so you guys know, half of our crew is in another country. So occasionally
two
there's
different countries.
Yeah, there's occasionally a little bit of lag time when we talk. So that's really it.
So the whole show's coming from three different countries.
That's
actually,
true.
That's pretty cool.
Isn't technology amazing?
It
anyway,
truly is.
Thank you so much for joining us on the Real Estate Investor Show. Hard money for real estate investors. We are Carolina Capital Management, and we are private lenders for real estate investors in the Southeast. If you'd like us to take a look at one of your projects, go to carolinahardmoney.com and click on the Apply Now tab. If you're a passive investor looking for passive returns, then click on the Accredited Investor tab. Don't forget to like, share, subscribe, hit the bell, and don't forget about Wednesdays with her.
Woohoo! Awesome.
Wendy devotes like 30 minutes per person, right?
Yep.
Every Wednesday, but she's booked out a couple of months in advance. So get on her calendar.
And I actually got this idea from our guest that's coming on.
That's right. It was Tuesdays with Jeff.
Or whatever day anybody could get in with Jeff. That's the big thing. So
anyway, the link is right there and also in our comment section, which is on the right side of your screen or underneath, depending on the platform you're viewing us from. Anything else to add?
Well, I just want to say this. We always talk about, if you're interested in passive investing, to go in and click on our investor tab. But we've got some bragging rights. We've had a phenomenal year.
Mm-hmm.
Our trailing 36 month is really good. But I mean, our last quarter we were at
10.76, and this is not a solicitation for selling of any type of security. Do your due diligence. Your mileage may vary.
Blah, blah, blah.
Your PPM.
Yes, it's very important to do that. But we need to talk about that because it's been really great. It's been well over 10 for the year.
The real estate business, while it sounds like it's really going downhill, if you listen to the news, it's still way outperforming the stock market.
And it's adjusting to normal, which is really nice. We all need a little normal.
All right, real quick, some breaking news. Good Lord,
so now the news isn't breaking anymore. It's old already.
It's old news now. So the Fed raised the rate another 75 basis points.
That's right.
I think it's like 3% hike now since they started, or at least close to it.
I can't wait to hear Brian Maddox talk about it tomorrow on our Sunrisers meeting that we have every Friday morning at 7:30 a.m.
Yeah, and I'm sure we'll have a link to that over here in the comment section as well.
Yeah, we'll talk in depth about that. That's good stuff.
Yep, there it is right here.
Yeah, awesome.
Sweet. Thank you, Sharub.
We also know that when the feds hike the rates like that it really isn't your mortgage rates that are going up 0.75. A lot of people assume that it's completely correlated, and it is attached a little bit, but
historically, the Fed is always chasing the market rate.
That's right.
If you you have to know people that have the graphs, but they're always behind the curve.
Yeah.
Always.
Yeah, for sure.
They're trying to destroy the housing market, and they're working on it pretty well.
Yeah. We're not going to let them do that though.
What else?
So I was reading this morning on a newsletter that I follow called Stessa, Stessa. They always have some good information, but they were really talking about the rent and apartment complexes versus single family residential, which I thought was really, really interesting. You know, apartments have been going up and up. The rents for apartments have been going up and up. The vacancies have been going lower and lower, which it's been very, very strong, and it will continue to remain strong. However, what we're seeing is that 1 and 2 bedroom apartments are, for the first time in a very long time, going down in price, which I thought was really interesting. And you brought up, because people are getting roommates to
They're probably
live.
having higher vacancy rates, so they're bringing the rates down a little bit.
Yeah.
Try and fill them, but it's because people can't afford to live on their own anymore.
Yeah. But the whole point of that article is really to talk about single family rentals and how strong the rent is for a single family home. And, you know, it's a great day to be in the buy and hold business. It's always a great day to be in the buy and hold or the build and hold business. It's
What happens if
pretty
you can't
consistent.
afford mortgage payments? You have to rent.
You get cold. Yeah.
You have to rent.
Yeah,
So there you go.
for sure.
If you can't buy a house, you can rent one until the rates come down.
That's right.
Right.
That's exactly
Or you
right.
can find one with a lease to own kind of deal as well.
That's exactly right.
All right. So enough gibber jabber.
Well, I want to talk about just a quick point too for the Sunrisers, for our meeting on Sunrisers tomorrow at 7:30. It is on Zoom, and that link is right there in the chat box. We are going to be talking about subject to real estate, in the real estate business, which is basically taking over a property subject to the financing in place. So I'm really excited about us talking about that.
One thing that
particular type.
I have a quick question about before we move on. I'm always concerned about how you get the person that has the mortgage to agree to take over that mortgage when they're ultimately responsible for it.
Well, you need to tune in tomorrow, and because that's a topic we're going to talk about.
That would be my biggest fear, is letting somebody else take over my mortgage, even though I'm the one that's on the.
Yeah, and there are ways around that. We're definitely going to talk about that tomorrow.
It's a great way to do it because, you know, obviously you're not going to take over a loan with a high rate.
That's right. Not these days.
That's right.
That's right.
And they don't have any more non-qualifying FHA loan assumptions out there anymore.
No, long gone. So, folks, we are really, really excited about our guest today. You may have noticed, if you've been watching for the past 4 weeks, 3 weeks, 4 weeks, we have been talking about raising capital and raising capital from your financial friends, which could be your family and friends, people that you know, like, and trust. And we really wanted to end this theme with a dear, dear friend of ours, Jeff Johnson, who is the bomb. And he's really, really good at raising capital. That's how he runs his business. So, folks.
And by the way, he's also known for packing more than one belt with him when he travels. So thank you for that.
Evidently, he pulled you out.
I forgot to pack my belt.
So here's our friend, Jeff Johnson. Jeff, welcome to the show, my friend.
Hey, guys. How we doing?
Great. Wow, you look like you're like doing a reality show.
Well, this is a house that I just finished and is going on the market tomorrow. Is that right? Tomorrow?
Wow. Look
Tonight.
At that beautiful, beautiful kitchen.
That's gorgeous.
Yeah. So there you can get a little vision, a little view of what's going down.
That is gorgeous. Okay. Tell us a little bit about, look at that fireplace. Oh my goodness. Tell us about this house. Where is it? What's the price? What's the deal?
Okay, so this is one of 4 houses that I built up in Oakhurst, which is 28205 in Charlotte.
Live there. My first house was in Oakhurst.
Yeah. So I bought a lot, and you guys saw Shannon, my realtor. Actually, Shannon helped me get this lot, but Bought this lot from the guy. There was a single house on it. We ended up splitting it into 4 lots. So I built 4 houses down the road here, and so this is the first one that's going on the market. So let's see, I paid $465 for the lot. So what is that? A little over $100,000 per building lot. Not too bad.
Not in that area.
Yeah. So my build cost in these is right around $350, I think. So this is a 2,700 square foot house, this one. And this one's going on the market tomorrow or tonight for $799.9. So not too bad.
Wow. That is awesome. Okay. I'm so glad you're throwing those numbers out. So Jeff, how did you finance this? Where'd you get the money? What'd you do to raise it? Tell me about what that looks like.
Well, this actually was a combination. So I actually did a partial owner finance. So the lot was $465, and the owner actually gave me a $300,000 owner carryback. So I only had to come to the table with $165,000.
Wow.
Nice.
And then he subordinated his loan to a bank loan. So I actually was able to do all this construction with a bank loan. But that, that's taken me years to get to that point, build my business to a point where I can go in and get a, $1.5 million loan to build 4 houses. So
that's awesome. And what kind of a bank is it? Is it a local bank, a credit union, a regional bank?
It's a local bank. Yeah, it's a local bank that I've had a relationship with for probably 7 years now. They've financed several homes for me over the years. So we've got a, ongoing relationship.
That's awesome. That's awesome.
You're throwing those numbers out there, and I told you my first home was in Oakhurst. I paid $23,500 for a 1,400 square foot 2-story house on Commonwealth Avenue.
Don't you wish I built one on Commonwealth too. Don't you wish you would have kept that?
Yeah,
oh my gosh.
No doubt.
Absolutely.
He even had his motorcycle in the living room. I remember that one.
It was never in the living room. It was in the foyer.
Nice.
So, are you nervous at all about being in that price range in these dark times that we're living in?
Well, sure. I mean, everybody's a little bit nervous. I mean, I think part of the problem is we all got used to things selling in 35 minutes, and now it's kind of back to normal the way it was before COVID. So,
yeah.
I mean, I started my business in 2009, so I was used to, 2 months, 3 months to get something under contract. So this is not something I haven't experienced before, but I think a lot of people who just got started are probably a little bit freaked out because they didn't figure in holding on to their properties for 3 months or 6 months. They didn't figure that into their costs. Plus, everything got so expensive there for a little while that everybody just assumed that they were going to make their money on the back end. I always say you make your money when you buy the property, just like I did with this property. I made my money when I bought this property. If I'd have paid $1 million for this, I'd be super nervous.
Yeah. I actually had a call this morning from someone that we did a loan for. She's still in it, 8 months into it. The contractor didn't really do her right. She had to let him go. So she's working with the new contractor, but unfortunately her, our appraisal, subject to appraisal, when she bought it, came in at 265 8 months ago.
Right.
And her agent told her she could easily get a little over 300 for it. So, and so she's been moving forward in her head, putting her own money out instead, because we're only going to fund from the numbers we run. And now she's sitting at a place where, she'll be probably getting what the appraisal originally said it would be worth. And she's not going to make any money on this deal. That's the difference between somebody new and somebody that's experienced.
Right. Well, I think a lot of what you're seeing is people who, way overpaid because they just wanted to keep growing, or they wanted to get more property. I kind of stopped buying rehab property the last few years because I saw what was happening with the prices, and I knew it couldn't last.
Right.
So I sort of tapped out, kept doing new construction, and because I can add the most value doing new construction.
Sure.
And there's less unknowns. Once I get the foundation out of the ground, there's really not a whole lot of unknowns when it comes to cost.
Right.
So
Jeff, talk a little bit about really how you started raising funds and what kind of people you were approaching to lend you money. How did you get started and all that? Because I think you are just so superb at having a good tool bag full of financing opportunities.
well, I mean, it's a long story, but a short story. I mean, I started rehabbing in '09, and I was actually in a men's group with our church, and I used to drag my trailer to the men's group because I'd be, that was my Fridays as the days I'd go do my real estate, and I was doing it all with hard money loans or whatever, and one of the guys in my small group said, "Hey, what's with the trailer? What are you doing?" And I started to explain to him, and I had just taken a class on borrowing money from people's self-directed IRAs. And so this was a friend from my men's group, and so I used all the tools I just learned and said, "Hey, if you want to invest with me, you can lend me money from your 401k, and I can pay you a return." And I think that the stock market had tanked at that point, so he was very unhappy with his stock returns. So I ended up borrowing, I think, $50,000. We ended up changing his IRA over to a self-directed IRA, and I ended up borrowing, I think, $50,000 from him to help with one of my projects. And then I returned his money, and then he said, "Well, now I have 100, so I'll lend you 100." Pretty soon, he had basically liquidated his entire regular 401k with his jobs. He worked for Bank of America and had put it all in a self-directed IRA and lent me every penny that he had in his retirement account. And he still does. So that was in 2009. So what is it now? 2022. So he's been lending to me for 13 years, and I think I've tripled his money since he started lending to me.
That's awesome. Now, are you doing the same kind of deal with him that you did in the beginning, or have your terms changed any?
Nope. Same exact terms. We haven't changed anything. It's been the same interest rate since day one. I have not changed it one bit. In my mind, I wanted to give my lenders a return that was good enough that they wouldn't go anywhere else. And that, once we build that trust relationship, they know that they're going to get a great return, and they're going to get their money back to me because I don't buy any crappy deals. But I didn't want to make it too much to where I couldn't actually deploy the capital.
Right.
I think that's part of the problem is you get a lot of private lenders, they want these crazy interest rates, and right now it's almost impossible to deploy the capital, which is as expensive as it is to rehab properties and build. I mean, gosh, my build costs went from, for these houses, I used to probably maybe $120 a square foot. I'm $175 a square foot now.
Wow.
And that's in 2 years.
Wow.
So that only took 2 years for that change to happen. So it's going to get harder to deploy expensive capital in this market. So
now is he lending in a secured position, or is he just lending to your LLC?
Okay, so right now he's lending us about $1 million total. And he's probably got about half of that in secured loans, and then the other half is in unsecured, loans to the LLC. But one of the things we don't do is just have that money floating around in the Ethereum. We actually have it assigned to properties. So it does have a signed property that it is loaned on.
Right.
But we just don't have a deed of trust on it.
Gotcha. So how has he helped you, if at all, raise more capital?
Well, he was very stingy at first because he didn't want me to go borrow money from anybody else, because he wanted to keep his capital working. But I told him, I said, I won't go borrow any more money until I'm sure that I can keep your capital working. And that happened like year 2. So I met another guy, it's another crazy story. I bought a inversion table for my back off of Craigslist, and it was a trailer both times that got me this money, which is funny. So I had my trailer to go pick up the inversion table, and the guy said, "Hey, so what do? You got a trailer?" And I told him, I flip houses. And he's like, oh, I'm really interested in that. So I ended up sitting down with him and having lunch. So what I did between my first and second lender is I actually put together what's called a credibility package, where I took all of the deals that I had done and I listed them out, what I paid for them, how much my rehab was, how much I sold them for, and then how much my investor got paid, my lender got paid. And I think at that point I had maybe 12 or 13 properties that I had done. And so I was able to give him this, 10-page credibility package and show him, like, here's the listings, here's the price I paid, here's how much I made, here's how much my lender made. And that made it so much easier once I had that credibility package to start having those conversations. So once I got that done and I had that second lender, I just started meeting with other people. And I didn't really solicit, but you can make posts on Facebook and you get people who are interested in what you're doing. And then you're starting to have these conversations. And I started meeting people for lunch and for breakfast and taking them to my properties and showing them what I was doing. It just unlocked all sorts of doors with money. Because it would blow your mind how many people have money sitting in an IRA or 401k that's not doing anything.
Right.
Lots of people, it's just sitting there. They don't know what to do with it. They're afraid to put it in the stock market, but they don't know how to invest it in real estate, and they don't want to actually own any real estate or flip real estate because they know that is not passive investing. So I just started having those conversations, and then of course, I wrote that book a few years ago, and now if somebody's interested, I just send them a copy of the book and say, here, read this, and then let's talk when you're done reading it. So I don't even have to explain the process anymore. It's all in the book.
That's awesome. What's the name of that book, Jeff?
It's called Retirement Returns with Real Estate. And I actually wrote it for other investors to be able to use. So I have people all the time that will send that copy of that book to a potential lender and say, here, read this book, and then let's have a conversation. And it just saves you, 3 or 4 lunches or breakfasts of explaining how it all works. And then the questions are just like, okay, what's the project and how much do you need? That's what I want to get to before I even have a conversation with somebody. I want them to feel comfortable enough that I know what I'm doing, that they're just asking me, okay, what's the project? What are we talking about here?
So here's what I think is so super cool of what you've been able to do. Number one, you put together, and I love the name of it, your credibility package. You're showing people what you do, because you're going after 2 different personalities. You've got the engineer person that wants details and numbers and that kind of thing. And then you've also got pictures and graphs and things for the other type personality that wants to see the summary and hear the story. So that's perfect. The other thing that I love that you did is you put together a book. You're teaching them how they can become wealthy.
Education, I think, is so important. And I think the other thing too is, I ran a subgroup for the local REIA for a long time, for about 6 years. And I used to do education in that group for potential lenders. There was no pitch. I wasn't trying to actually raise money. I just wanted to teach people about how to use private money. And so I ended up getting, a lot of people that had private money come to that meeting, and then ended up creating a relationship with them and borrowing their money. So it's really been sort of organic the way it's all happened. But the funny thing is, once you start pushing that 600-pound boulder, once it starts rolling, it's hard to stop it, because then you have people throwing money at you, and you're like, hey, I need to get some more projects and some more things, so I can, that's a good problem to have, because y'all in real estate, you always have either a money problem or you have a house problem.
Right.
So you either have too much money, not enough houses, or too many houses, not enough money.
Yeah.
I'd rather have the too much money, not enough houses problem.
Yeah. You and me both.
So if you go back to your original lender, Bank of America, and he worked for Bank of America, yes. Right. Yes, but he has the opportunity to get with B of A Wealth Management, so he could put all of his money. They're very well known for all their wealth management stuff. I wonder how much he would have made if he would have stuck with the traditional way of earning in his farm.
Definitely not the returns that he got from us. Not even close.
Right. That's right.
Isn't it weird how that works? The people that actually are in the financial industry finally get that light going off. And what am I doing here?
Yeah. Yeah.
Well, the other cool thing too is, he's been part of my growth. So every year when we look at our profit numbers, I always send him an email, or we go have lunch or breakfast or whatever, and I say, I literally could not have done this without you trusting me with your money.
Sure. That's awesome. I know he appreciates it.
What a gift.
Yeah, no, absolutely. So he's been part of my journey. Every lender's been part of my journey. And then when we started Better Path Homes and really started to grow, I think we have 70 some odd houses being built right now. We have, dozens of lender partners that have come alongside of us, and we've been able to help them build their wealth, and they've watched us build our business. It's been a really wonderful partnership.
That's awesome. And you lend your money too. Your self-directed IRA money.
I lent it to you.
In fact,
I put my money where my mouth is.
I'm going to get some more here shortly too.
So Chris Miles.
Yeah.
We had him on the show a little while back, and he was telling us a story about his dad, because Chris used to be a financial advisor. He's now the anti-financial advisor, and his dad wanted to retire. He'd had a 401k all of his working adult life, and he asked Chris to take a look at it and ask him kind of where he was. And Chris said to him, you've done all the right things. You've done everything that is expected of you in a 401k. Your only problem is you have to die in 5 years.
You're right, because you can't afford to live any longer than that.
Right.
Yeah, that's for sure. I'm telling you, Jeff, I've known you for such a long time. You're a dear friend, an awesome human being, and I'm just blessed to have you in my life. And I'm so excited to have watched you turn into this incredible, successful real estate investor and builder in the time that I've known you. Just watching you grow has just been incredible, and learning from you. And I steal all these great ideas that you have, and I appreciate that you allow me to do that. It's been a pleasure, and I can't wait to see what you have in the future. And we're so grateful that you came and shared this information with us. I think it's important that people know that everybody can do this.
Yes.
Hey, how can people get a hold of your book anyway?
It's on Amazon. You can just look it up. It's Retirement Returns with Real Estate. Jeff Johnson's the author, and I have it priced, so cheap that you can just send them to your friends and family, whoever you want to talk to about investing with you. So that was the whole point, was to be, give others a tool, a very specific tool. So it's very specific to our industry, so that they could start having those conversations with people.
Right. Awesome.
Well, Valerie just made a comment saying that she can't wait to read your book. Thank you.
So yeah. Oh, look, there it is.
See how quick our staff is.
Yeah.
Bam! Look at that. There you go.
There you go. That's awesome.
So the first time I met Jeff, he was working on the house right next to me, which was kind of funny. I won't get into that story, but
it was a good one.
It's been quite the journey since then, hasn't it?
Yes, it has. It has. That was a funny story.
When we have an additional hour, I'll tell it.
Yeah. Okay. Deal.
Jeff, thank you so much for coming on. We really, really appreciate your story and your desire to share it with everybody. Thank you so much.
Yeah, we're gonna
thank you guys.
Green room for just a second while we close this thing out, so we can thank you properly, if you don't mind.
Yeah.
Okay. Thanks, guys.
All right,
Thanks, Jeff.
Folks, thank you so much for joining us on the Real Estate Investor Show. Hard money for real estate investors. We are Carolina Capital Management. We are private lenders in the Southeast for real estate professionals. If you'd like us to take a look at one of your projects, go to carolinahardmoney.com, click on the Apply Now tab. And if you are a passive investor that doesn't want to give money to Jeff, click on the Accredited Investor tab. Don't forget to like, share, subscribe, and hit the bell. Don't forget about Wednesdays with Wendy. See you guys next week.
Bye.
Hey.